So how much does the average mortgage cost? There are three factors that influence the average mortgage cost: interest rate, loan sum, and term period. So if we start with the interest rate, the main determinant of the interest rate that you'll get on a mortgage is what's called loan to value. So it's your loan relative to the value of the property that you're either refinancing or purchasing. So for example, if you're a first-time buyer and you're buying a property, most first-time buyers, they'll have quite a small deposit. Let's say you've got a 5% deposit of your purchase price. 5% is the minimum deposit required to get a mortgage in the UK. Now, obviously in that scenario, it's very high risk for the lender. They're offering 95% of the value of the property as a mortgage, so they're really exposing themselves to fluctuations in the market. If house prices fall, then obviously they could actually end up in a position of negative equity. So if they had to repossess the property, sell it on, they may end up being at a loss. So lenders understand this. Now, the higher your loan to value, naturally, the higher risk to the lender, and therefore the higher interest rate. Now, in terms of best interest rates available on the market, you need to have at least a 40% deposit or 40% equity in your property to access the very best interest rates in the market. There's no difference after that 40% mark. So if you had a 40% deposit or an 80% deposit, it would make no difference to the interest rate. Now, average interest rates in the UK, that will therefore depend on what loan to value you're going for. If you read further in this article, you can see more figures in terms of interest rates. But to give you an idea, for a 2-year fixed 75% loan to value rate, the average across the country is currently 5.89%. For the same LTV on a 5-year fixed, it's 5.34%. And for a standard 2-year variable, at 5.85%. And then you've got the standard variable rate set by the lenders, which is far, far higher normally than a product rate, is 8.65%. So as you can see at the moment, 2-year fixed rates are higher than the 5-year fixed rates. And that kind of indicates that lenders expect interest rates to fall in the long term, whereas in the short term, they may stay at a fairly high level. So the second factor that influences the average mortgage cost is the loan sum itself. So obviously the loan sum around the country will differ. There's many factors that affect this. So for example, we know that in London, incomes are typically quite a lot higher than in, say, the north of England. So you'd expect to see far larger loan sum applications, and that follows suit with the high purchase prices that we see in London today. So that's why London, and actually in the south, loan sums are typically a lot higher. If you want to scroll to the bottom of this article, you can see more details on that. But it's always location that will determine the loan sum typically. And in areas of the country where demand for properties is a lot higher, you'll see the loan sum follow suit. So the third factor that influences the average mortgage cost in the UK is the term length applied for. So on an overall mortgage term, you can typically get up to age 70 or 75. So that really will influence your monthly mortgage payments significantly. If you have a short term, over say 10 or 15 years, the payment's going to be way, way higher than if you had an average mortgage term of say 30 or 35 years. Some lenders even allow you to take a term up to 40 years, but most will limit, as I say, your age to 70 or 75 without proof of pension. So just to reel off some stats for you in terms of the average mortgage cost, this is as of April 2024. Average monthly mortgage payments in the UK were £1,202, which I suspect is significantly higher than previous years because of what's happening in the UK economy at the moment with high interest rates. And on average, Brits are paying £720 a month for their individual share of the mortgage payments. So now, because house prices are so high, it's quite common for people to buy with a partner, and therefore they're typically sharing that mortgage payment. The average mortgage size as well, taken out between October and December 2023, was £183,955, and the average outstanding mortgage debt per household in the UK is £127,140. So here's some good news. So in March 2024, the average 2-year fixed mortgage rate for a 25% deposit mortgage was down from 6.22% in July 2023 to 4.97%, as I say, in March 2024. Sadly, the rates have steadily crept up recently because of the uncertainty in the economy, but the outlook is still very much, in the short term anyway, hopefully over the next few months, for the Bank of England to reduce the base rate, which should hopefully then have a knock-on effect to reduce rates in the overall economy. So if you would like to learn more about mortgages or need mortgage advice yourself, contact us at Boon Brokers. We're whole of market, fee-free mortgage brokers, and we're also directly authorised by the FCA.